Hey everyone, and thanks for jumping back into the cryptoverse. Today, we're going to talk about Bitcoin, and we're going to be going over the Heikin-Ashi candles. If you guys like the content, make sure you subscribe to the channel, give the video a thumbs up, and check out the Sound the Premium list at intothecryptoverse.com. Now, we talk about the Heikin-Ashi candles somewhat frequently, but the point is to really look at longer term momentum shifts in the market. And one of the things that we've noted many times is that the lower the time frame, the less useful the trend shift is, because you can have these, false breakouts. So when you look at things on the daily time frame, you'll see all sorts of shifts, all sorts of momentum shifts one way or another. And even during the run up of late 2020, there are even some red daily Heikin-Ashi candles, which means in the short term, at least, the momentum went back down the other way. But once you really start to look at longer term time frames, you begin to see more useful trends. Okay, so Heikin-Ashi candles are really great for establishing uptrends and downtrends. All right, so an uptrend, as we said before, is characterized by large candle bodies, overshadows, and no or few undershadows. So you can see back in late 2020 and even going into early 2021, we just had tons of large candle bodies with overshadows, meaning, occasionally we had an undershadow, like right here during the shift in the trend, and also right here. But for the most part, the general direction was up, and it was a very exciting time in the cryptoverse. On the other hand, large candle bodies and undershadows with no overshadows are a good indication of a downtrend. And that's what we observed back during the summer lull. And what you'll notice is that a lot of times when you see a shift in the trend, or at least an attempt, you'll start to see some overshadows sort of pop up. Okay. And then finally the bulls will break through, and then we'll go on an uptrend for a while. Theoretically speaking, of course. But even here, there can be false signals even on weekly time frames. Because again, if you look at weekly time frames, what happened in September was still a fairly nice pullback. We discussed the implications of this pullback, the idea that Bitcoin doesn't generally do that well in September. So it's not like it was that surprising, but it still showed up even though Bitcoin was en route from 30K all the way up to around $69,000. And then following this period, we entered another downtrend, somewhat similar to the one we experienced over here. They're not exactly the same. This one sort of ripped the band-aid off and then went sideways. This one over here has more or less just been a slow bleed. We had large candle bodies and undershadows with no overshadows. We sort of fought for a couple weeks, just like we did over here, and then the downtrend resumed. And then now we find ourselves in a very precarious position, right? A very precarious position, because we're not actually seeing, not yet anyways, we're not seeing that sustained push to the upside. Now, it doesn't mean it can't come. Well, it hasn't come yet. And the point is over here, we had these large candle bodies that took us up. Right now, there's a lot of uncertainty in the market. And I don't really know how else to state it. It's just there's a lot of uncertainty. There's a lot of people that are bullish, and they're fighting for Bitcoin to go to the upside. A lot of people are bearish, and they're fighting for Bitcoin to go to the downside. And you can see that some weeks the bulls are winning, and some weeks the bears are winning. Okay? But there really has not been an established new trend yet. It's just been sideways, basically, since mid January or so, mid to late January. So basically a couple months now, the price of Bitcoin has more or less just been going sideways, somewhere between like $37,000 to $42,000, plus or minus a few K on either side, right? What's a few K among friends? Now, from here, let's go to 2-week candles, because 2-week candles start to get a little bit more useful, I think. And the reason is because, you really drown out the noise of some of the stuff going on lower term timeframes. Again, remember that when looking at daily timeframes, there are all sorts of false signals over here. When looking at weekly timeframes during this run up in late 2020 and early 2021, we still had some sort of false signals. Like if you had looked at this red candle here and thought that meant that we were about to come back down, you would have been disappointed, because we ended up coming back up and we went into this distribution phase. However, looking at 2-week candles, you can see that that didn't even barely register as an undershadow, only barely registered as an undershadow when you look at 2-week candles. And you can see on 2-week candles that after we finally held the support at the bull market support band, which we talked about this a lot. I mean, if you go back and watch videos back in the third quarter and early fourth quarter or so of 2020, we talked about the implications, the positive implications. If we hold the bull market support band as support, we can take off, okay? And what happened? We just saw, 2-week candle after 2-week candle, which again was characterized by large candle bodies, overshadows, and really no undershadows to speak of, except maybe a small one here. And then once we really got this one, it sort of signified that the trend was coming to an end, and that we were going to be at least probably going to go down for a while. Okay, I mean, the implication back then was that we would have a summer lull where we would go down for at least 3 to 6 months. And what's interesting is during this lull, again, we had several 2-week candles in a row that had no overshadows except for this one up here. And then once we sort of had one of these candles, we shifted back in the other direction. What's interesting, we don't have that yet, right? I mean, it doesn't mean one can't pop up, but at the current time, we don't really have that. What do we see when we look at 2-week Heikin-Ashi candles? We see that, for a couple of months, we were in a fairly clearly well-defined downtrend with large candle bodies, undershadows, and no overshadows. But over the last several weeks, over the last 2 months, we've more or less just been trending sideways, and you can see there are overshadows on like all of these candles. So what is that? I mean, it shows there's a lot of uncertainty. The reason they're still red, you might wonder what makes them red or green. First of all, they're calculated differently, right? So like the price that you might get from a weekly candle or a 2-week candle is actually, it's not just the closing price. It can be calculated as like a combination of like the closing, the open, the low, and the high price. So like 1/4 of all, basically just taking the average of those 4 metrics. So that's one way you can do it. And when you look at that, the only way for the 2-week candle or for any candle in the Heikin-Ashis to actually turn green, they have to close above the midpoint from the prior candle. But none of these candles are closing above the midpoint from the prior candle. So what it means is that while technically you could argue we have been just going sideways, the momentum has still been slowly shifting down. Okay, so what it means is we've been spending less and less time at some of these higher prices, and we've been still subtly shifting down, but there are some bulls that are putting up a fight, as shown by the overshadows. Again, you can probably visualize this a little bit better when looking at daily candles. So you can kind of see that, a few weeks ago, we were spending more time at some of these higher prices, but as time goes on, we've spent less and less time at these higher prices. And therefore, I feel like it's fairly well captured by these 2-week Heikin-Ashi candles, and you can see that the momentum has still carried us down. Okay, so there really has not been a clear and well-defined shift in momentum at this point within the cryptocurrency asset class. Again, it doesn't mean that one can't occur. It just means that one has not happened yet. And really what we would like to see is we would like to see Bitcoin get back above its bull market support band, right? This is the ball, so we need to get past. And then we can start talking about everything we need to do to remain bullish. But right now we are still very much in this sort of slump that we've been in since mid-November. I mean, we're still hanging out at around the $40,000 level. There's been a ton of stuff that Bitcoin has had to overcome. I mean, tons of there's the Fed fighting inflation, but everything going on in the world, Bitcoin's had to put up with a lot recently. But again, it's mostly just been going sideways for the last several months. If you look at this on the monthly candles, by the way, it's interesting because what it shows is it doesn't even pick up the September drop. And you can see these fairly well-defined monthly candles that took us up, 3 that took us down, 4 that took us up, and now 4 that have taken us down. Now, what's interesting is at least this is the first one, March of 2022 is the first one we've seen basically since December that at least has an overshadow. So there are some bulls that are finally showing up to the fight, even if they haven't actually overtaken the bears at this point. Remember, the bears remain in control as long as Bitcoin stays below the bull market support band, because the bears like to defend that level. If you go look at, say, like weekly time frames, and you look at the bull market support band, we keep having like wicks up to it, but they keep getting sold off. So right now, the bears still remain in control. If the bulls can push price past these levels and then hold it as support, then the bulls would be in control. But right now, you can clearly see that there's a lot of uncertainty in these markets. So again, going back to the 1 month candles, this is what it looks like. So I think again, looking at longer term candles really is the way to go. Again, you can see like in 2018, a fairly well-defined bear market, and this was also a fairly well-defined bull market with only really one false signal on the monthly time frame. And then we also had a nice shorter bull market in early 2019. And then we had a bear market during the second half of 2019. And it's really hard to get too critical of this area because it was the pandemic, and every market just crashed basically during that time. And then a fairly well-defined bull market, and then a fairly well-defined short-term bear market, a well-defined bull market, and so far we have another well-defined bear market. Again, I'm not one of these guys that has to see Bitcoin drop 85% before I call it a bear market. I mean, if my investment's down 50%, I'm not gonna say that's bullish, right? I mean, it doesn't mean we can't go up. Doesn't mean that it doesn't mean that 33K is not the bottom. But I don't really get the reasons for for having to wait for Bitcoin to drop 85% to call it a bear market. Maybe there's some differences between, say, like a bear market and crypto winter. But in the stock market, you really only have to see a 20% drop before calling it a bear market. Arguably for crypto, if you call it a bear market anytime it had a 20% drop, you'd be calling it a bear market every other Tuesday. So I can certainly understand maybe saying 40% or something, 45%, I don't know, 50%. Seems somewhat reasonable. But regardless, we want to see Bitcoin do well. Look at the Heikin-Ashi candles, right? Look to see, are there momentum shifts occurring on the smaller time frames and the larger time frames. Remember, you'll see things happen on the smaller time frames before you'll see them happen on the larger time frames. So you have to start somewhere, right? Like you have to start somewhere. If you go to the daily candles, you can see recently we've been in a local uptrend, but this is just basically Bitcoin's just been getting chopped up here for quite a long period of time. Nothing really crazy has happened. But hopefully, at least, when we talk about these Heikin-Ashi candles are at least somewhat useful. And you can use them to try to help get a better gauge of the momentum within the asset class. All right. If you guys like the content, make sure you subscribe. Remember, we do have the premium list at IntoTheCryptoverse.com. If you subscribe, you'll get access to 3 weekly premium videos. One of those is a live stream where I answer a lot of questions. You'll get access to weekly reports, a website with a lot of on-chain data, logarithmic regression, return on investment data, strategy dashboard, which talks about like DCAing, that kind of stuff, risk levels, social statistics, total cryptocurrency market cap. So you'll get access to a lot of stuff. So check it out. You can keep that price as long as you do not cancel your subscription. And I will see you guys next time. Bye.